Hey everyone, welcome to another episode of The Remote Real Estate Investor. I'm Michael Album, and joining me today is Jeff Wills, our certified agent out in Tampa Bay, Florida. And Jeff's going to be talking to us today about all the things we as investors need to know and should be aware of if we're investing in that market. So let's get into it. Really quickly, before we get into the episode today, I want to encourage everyone to go check out roofstockacademy.com. Roofstock Academy is our one-stop shop for real estate education, independent of whether you're just getting started or a seasoned investor looking to scale up or get involved in a different asset class. We've got lectures, we've got coaching, we've got one-on-one Slack access forum, and a plethora of other financial benefits, as well as money back on your marketplace fee credits if you're transacting on Roofstock. So come check us out at roofstockacademy.com. Look forward to seeing you in there. Jeff Wills, thanks so much for taking the time to hang out with me today, man. I really appreciate you coming on.
Absolutely, man. Love to do it. And thank you for having me.
Yeah, of course. So we're just going to jump right into it. And we're talking today about Tampa Bay, Florida. I want you to give all of our listeners why Tampa, why now?
So why Tampa? Why now? Honestly, I've been hearing that a lot. However, it has been very, very popular as of late. A lot of the big things that people are hearing. Actually, just yesterday, Goldman Sachs bought 305 units in downtown Tampa for $168 million. Setting another record price per unit, and a crazy valuation for cap rates right now. And so there's a lot of synergy. The biggest thing behind it has been Water Street. Water Street's about halfway through its 10-year growth plan. They've got phase one out of the way, phase two starting. And that has really brought a lot of life and vibrance to Tampa that was kind of growing and burgeoning there prior to COVID, prior to all the popularity we have now. But I think it's really hit its peak. And honestly, it's probably got a good, 10, 20, 30, 50-year stride to soon looking like Miami. Although personally, I hope not. I'd like there to be a little bit less people and keep the enjoyment that we have here. And honestly, Tampa's a big town. It's a big population, but it really does have an extremely small town feel with the micro communities inside the neighborhoods, inside the certain, sectors and where we are on the map and near the water. And so I think Tampa has a lot to offer, both from an investment standpoint, from a long-term hold appreciation standpoint, and especially a rent growth. I don't know what that's going to look like now, just because, kind of has hit a very, very high mark. However, we're not seeing any vacancies. We're not seeing, any kind of rent concessions. I was just talking to a very big property manager yesterday, for a different reason, but they were saying, yeah, we're barely giving rent concessions. We're hitting full market rent. Everything's at 95% occupancy or above. And there's no signs of stopping. So I love it. I've always thought Tampa was a hidden gem before COVID and before things got crazy, but kind of very lucky to be here now and enjoying every minute of it.
Right on. Jeff, that's super interesting. So I'm wondering, what was that cap rate for the Goldman Sachs purchase? Do you recall?
Honestly, I don't have that in front of me. I can almost guarantee it was probably sub 4, even after tax adjustment. It's crazy. I actually lived in that building when it first opened. I snuck in with some rent concessions and realtor bonuses and stuff
Right
like that.
on.
So I kind of skated in a bit, but I mean, it went through a lot of challenges. I mean, management was horrible. 2 years they had the same management, then fired that one, and then fired another one, and they've had problems left, right, and center with that building. Just knowing, because I've got friends that live there and stuff still, and it's still selling for that price. Given, I mean, there's a bar across the street that has so much drama tied to it. It's insane that the publicity from that sale has anything to do. And so backing up from that, Goldman Sachs has long been rumored to be taking a very, very big piece of the pie in the Water Street office space. And so while that hasn't been announced, Goldman Sachs buying that building to me just sounds like corporate housing. Instead of them
Uh,
having to go and give all their employees stimulus, oh, we'll give you a 5,000 month allowance. They'll say, hey, here, we've got a block of rooms, pick one, enjoy yourself, it's paid for. And I think that might be how they're skating that market rent, because some of the stuff in Water Street, Tampa is going, actually, I just talked to my friend yesterday, 966 square feet with a big balcony, 5,000 a month. And that's
what?
exactly what I did. Yeah, at 550 a square foot, yeah, it's insane. And I mean, once you set that standard, I mean, okay, the Heron is the best multifamily building I've ever seen. But I mean, setting that precedent, all people have to do is just be nearby and just enjoy the overflows of people who can't live
Right.
there. And by the way, they have zero vacancy. They have a wait list for that unit that's coming up, Dune. It's crazy.
Holy smokes. So, Jeff, you clearly an expert on the area. Give people a little bit of background, who you are, where is it that you come from, and what is it you're doing in real estate today?
Absolutely. So I grew up about an hour north of Tampa, in a county called Pasco, a very small town. And to me, growing up, Tampa was a big city, a really big city. I had been there 3, 4 times, the aquarium a couple times, and I just every time staring at the top of the skyscrapers. And that was just the biggest thing to me. And growing up, went to college, didn't really know what I was doing there, went for finance. I was like, let me kind of figure stuff out. My dad one day was like, "Hey, why don't you just, pop into real estate, see what's going on?" I'm like, "Well, sounds fun. Should be pretty flexible. I
Go
like numbers. I
devil.
like people." I'm like, give it a go." 7 years later, here I am, and it's just been, from top to bottom, you get to help people with something that's extremely difficult, extremely stressful, and very nuanced. And I mean, from deal to deal, there's always something different. There's always a different backstory, a different why, and even growing up prior to all that, I've always kind of felt that I was a good listener. Of course, I have my own, opinions and desires and stuff, but I was always able to kind of peel back. What is somebody looking for? What does somebody want to do? What they're telling me one thing, but what do they actually mean? And I've always, of course, asked them, hey, you're saying this, but what do you want this? And it's just been very enjoyable. And the client feedback is the same. I've got a ton of referrals, a ton of repeat customers, and it's very, very enjoyable for me to be able to, simmer it down to the parts that they can control and make sense of. And then I just handle all the other legal mumbo jumbo stuff on the back end. And it's just been very, very enjoyable. The first 3 years, I was very retail focused, end user, not very investor friendly, and kind of got bored with that. And I was like, I've always enjoyed numbers. I've always been pretty good at numbers. I'm like, why can't I get into the investor side of things? And that's when I joined my current brokerage, Seafair Investments. And from there, it just kind of skyrocketed. Our office is set up extremely streamlined and efficient, to the point where in the past 13 months, just me and my broker together have done about 137 million in business, and 98% of that was investors. And we're just masterfully efficient, fine-tuned, and we know how to strike valuations from Jacksonville down to Fort Myers. It's a few things. We know how the appraisers operate. We know what a tenant's going to do to it as far as evaluation, what people are paying, because we've got 30 under contract that we can look at and say, oh, hey, a cap rate is this based on this area. Like, we just have a ton of insight and ability to help our investors. And, even just last week, we have, I guess it's kind of our secret sauce, but it's very simple. Every Friday, all of our clients get an update, regardless of status. Did nothing happen? Hey, nothing happened today. Just wanted to let you know, have a great day. And yet again, I had another client last week said, hey, honestly, we haven't even spoken on the phone once. It's been all email. I just wanted to say thank you. You were exemplary. And, he even brought up the Friday thing. It's like every Friday I had an update. I didn't need an update. I didn't ever had a question about what you were doing, how the property was going. And so while those compliments don't always come, I mean, it's always 90-10 with that. We haven't had very many upset people at all. And they always bring us their next listing, or, hey, I'm trying to buy in here. And buying has been very challenging right now. So a lot of the investors are on hold, being patient, seeing what rates are doing. But all in all, it's been really, really great, especially on the sales side. And we're just, happy to help people while we can, while the market's doing great.
Right on. Well, it sounds like if you ever transition careers, whenever you're done to be ready to be done with real estate, you could make a great therapist. Good listener. That's an important key.
Oh my God. I joke about that all the time. I tell people sometimes, like, oh man, I've done so much marriage counseling. I'm good to go. They're not even married yet. They're like, what do you mean? It's like, ugh, like, do one deal, you'll know.
You'll get what I'm
But,
saying. Oh, that's
oh yeah,
great.
it's a lot, but it's just very easy. I mean, at the end of the day, people want a couple things. They want to be comforted. They want to be, they want to know that you're honest, and they want someone reliable. And if you can fit those buckets while being a joy to talk to and to interact with, I think that's really all I need to do.
Love it. Love it. Love it. Well, Jeff, let's dig into the kind of meat and potatoes of the Tampa market a little bit and give listeners some insights into, other than this Goldman Sachs transaction, which set new record highs and the buying being a little bit difficult. Let's educate people about the Tampa market. So, who are some of the major employers in the market? And are you seeing people moving to the area or maybe moving out of Tampa?
Definitely a massive influx. I'm not sure the exact daily rates, but I know Florida pre-COVID was about 1,200 people per day. After COVID, we're at about 2,400 to 2,600 people per day from out of state moving to Florida. And while that's not always Tampa, that really is the only place that has had affordable housing, affordable rents, especially compared to Miami. Compared to Orlando, Orlando was a relatively higher price than us just because it was more pocketed. It was hard to find an actual community over there. While there are a handful, it's very spread out and sprawling, and Tampa is extremely concentrated. Some of the larger employers in Tampa are, I wouldn't say there's one or two. The majority are a lot of healthcare providers, hospitals, doctors, stuff of that nature. A very big presence with attorneys. And then honestly, Tampa is becoming a very, very big tech hub. ReliaQuest is a very big cybersecurity firm. They signed in Water Street for the top of their Class AAA office tower. And so it's been rumored. I've seen a couple articles that Tampa is the next Austin as far as a tech hub. And we're tax friendly. We don't have any state income tax. We have homestead. There's a lot of things that were already here, and then now as other states like California are being more taxed, even more strict around a lot of things. It's increased that flow, and I don't think that stops for a long, long time because Florida has so much land. We have so much room for stuff. And while, even though you might not be right in the heart of Tampa, a 35, 40-minute drive is no big deal. And you are close to a million different things inside that span. So just, all of those things. And then one underlying factor too that I like to tell that nearly no one knows that I mentioned is pre-COVID, I haven't checked these numbers after, the Port of Tampa, you probably never heard of it, does $3 billion in revenue every year, if not more. And so that has been a very silent provider. Actually, one of the biggest companies in Tampa is Mosaic. They own right over 400,000 acres, and they're a fertilizer company. So they are huge in Tampa, as from ground all the way up to politics and everything else. So they are a very big employer and advocate for the port and everything else that's going on there.
Right on. And Jeff, can you give folks a sense of what is a traditional, typical 3-2 single family home cost, and what would the rent look like? And maybe you can give people an idea of some of the different neighborhoods in which they could be considering.
The median home price now is right around 335,000 today, and we have about less than 2 months of inventory. Scroll back to 2019, we had about 6.5 months of inventory. So we've reduced that by about 300%. And days on market, 3 to 5 days max, if it's even close to move-in ready. And that median price, I'm looking at the chart now, it's very, very close to 350,000 as of today.
Oh my
And
gosh.
it's very, very challenging. But some of the better neighborhoods, so if you're in Tampa, South Tampa is really where you want to be, but those price points are honestly $1 million homes for a 3-2. And so those rents and cap rates just won't sweat. They won't crack the code for what we're looking for and what honestly any investor should be looking for. So that's not really where we want to be, but I would say that Brandon is a great area. It's just outside of Tampa. It's about 30 minutes east. Very sprawling, tons of land, tons of nature, tons of trees. And that area is a great neighborhood. Very roughly same median price per square foot. You'll probably be able to get rents around anywhere from 1,900 to 2,200 for that size home, depending on the condition. And that's honestly a pretty savory return. Of course, you're now seeing 4 and 450 be the norm there too. But the rents are following. Rents for those are 2,600 to 2,800 all day long, and sometimes that makes the cap rate. Maybe the cap rate's a little more compressed and the overall return, but the cash flow is higher, and the appreciation is going to be there. Another, man, it's really hard to find a great cap rate neighborhood right now because it's getting nipped up so much. If you go west of Tampa, north to the West Chase Oldsmar area, that's a great little area too that has very, 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 very quickly start to price up as everybody's moved there to where they couldn't afford South Tampa, to where they couldn't afford north of Kennedy and West Tampa. And so that's an excellent little pocket there. Great schools, great golf courses. You've got all ages that enjoy that area, which is, in my mind, for somebody that's looking for a renter always, that's a good market to be in. And then if you go north of Tampa, you've got Carrollwood up there and Greater Northdale. So all that area there is also a great pocket of Tampa. The price points are going to be pretty high on average as well, but you can still find that starter entry level home. And if you can get it at a good cap rate, buy it. Every growth that I've seen is coming north of Tampa in waves. And this Cheval Lutz area, all the way over to Keystone and Eastlake, this actually has the highest concentration of wealth in the Hillsborough County. So it's actually not in South Tampa. It's not in downtown. It's not on Davis Islands, which is a phenomenal, honestly, the best part of Tampa. But a home there is, 4 million for 1,500 square feet. So those prices are crazy. But this area is excellent, very equestrian, tons of lakes, tons of lake homes, tons of golf courses, nature trails, preserves. An excellent, excellent up and coming area to be in. And then one last area I'd like to highlight is the Ybor City and Seminole Heights area. So this area is directly north of downtown Tampa. And if anybody on here is familiar with St. Pete and 4th Ave, 4th Ave stretches out of downtown St. Pete and goes north. And that stretch is probably a 10-mile stretch of the most golden real estate I've ever seen. Retail, shopping centers, storage, homes, but that's been there for 20, 30 years. And then north and east, where you see that Columbia restaurant, is Ybor City. Historic Ybor, ton of culture there, ton of background, ton of history. An excellent place to be, but it is very, very pocketed and very hard to find land there, but would be an absolute killer. The next best spot is going to be Tampa Heights and Seminole Heights. If we see the Hillsborough River here, that's kind of the cutoff point for Seminole Heights. And then everything south of the Hillsborough River to about 15th Street is both Tampa Heights and Seminole Heights. Those areas are fantastic. People love to be there. There's a whole bunch of, farmers markets and pop-up shops and just cool boutique-y stuff that is not, another McDonald's and Taco Bell that people are bored with. So that's another great neighborhood. And that also sprawls out into where you see Wellswood and then West Tampa over here by the airport.
That's a super great overview, Jeff. Thank you so much.
Absolutely.
So curious if you can give people an idea of how property taxes work, because I think that can often be, and I'm sure as you see, one of the biggest make or breaks of a real estate deal. So give folks a walkthrough. In the greater Tampa area, of course, it varies county by county, but how should they be thinking about property taxes?
An excellent question. So obviously we all know taxes based on a millage rate. Every county, like you said, is different county by county. But based on that, there's really not much else we can do to kind of guesstimate and or further understand it besides going to the property appraiser website, plugging in the property and estimating the taxes. A good rule of thumb with that, though, is that I found is anywhere between 85 and 90% of the purchase price, and then take the millage rate. Now you can kind of skip the step of going in there and directly estimating it, but that will get you within 99% accuracy of the taxes when they become reassessed after closing. And so again, that's 85 to 90% of the purchase price. So if it's 400, it's going to be about 375, 380. And then take the millage, and then that'll be your new annual tax roll. And that is very, 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 very important to take into account, because I've seen a lot of investors in the past go into a property and just pull the current taxes without any idea that they're going to go up. If that person's owned the home for 30 years, taxes are going to be about $1,000 a month on a $400,000 home. After you close, they're going to be closer to about $5,000 to $6,000. So that alone can easily skew a deal. So you always want to make sure that the taxes are properly at least estimated going in, and then double checked while you're going through the process.
Jeff, you said 1,000 a month for that 30-year old hold, but I think you meant 1,000 a year, right?
Correct. Yeah, absolutely. 1,000 a year for sure.
Okay. Okay. So is there like a good rule of thumb if someone doesn't know the millage rate, like 1% of the sale price or 1.5% of the sale price?
I would inch to 1.5% of the sales price because I'm seeing more and more that a $400,000 home is anywhere between 5,500 to 7,500, depending on their tax district. And while it is county by county, there are some overlays in some certain neighborhoods and CDDs that will have some effect on that. So I would definitely lean to 1.5%, and then if you want to be real conservative, just go 2%, and then it'll always be below that.
Okay. Right on. Now, anyone who's ever listened to the news ever or who follows any kind of climate or weather has heard about that Florida has hurricanes.
Oh,
Talk to
absolutely.
us a little bit about some of the weather and climate things that are unique to Tampa that someone from California might not be aware of.
Right. Well, I will say anything that you've seen from not being in one, it's always way crazier or way less crazy than what they say it is.
There's not
Obviously,
people
we've
hanging
seen.
onto palm trees, getting strung out.
Oh yeah, all extremely oversaturated in my opinion. The biggest thing with Tampa Bay is flooding, and that really only happens in South Tampa and waterfront properties. So honestly, I would say any investor in Florida should really avoid waterfront properties because of hurricane insurance and flood insurance. They're just too high and they're going to kill your returns, not including any liability insurance you have for the tenant that's there. I would say waterfront would work excellent in a short-term rental because that's kind of a hotel-y experience, but a long-term tenant really is not going to do great there. I would certainly avoid it. Overall, if you're in the mainland and not in a low-lying area, hurricanes aren't going to do just about anything to you as long as the home is up to code and you have a, hurricane preparedness step. Do you have the metal covers for the windows? And just, a simple Google search will show you how to get hurricane ready, but it's really way more than they hype it up to be.
Okay, awesome. And that's a really good point that you bring up. If the house is up to code, you expect it to withstand a hurricane or not be damaged by one. How should people be thinking about older housing stock? Or does Tampa even have older housing stock? Like in California, we've got a lot of 1950s built ranch style homes. That's just a lot of the bulk of the inventory. What are you seeing there in Tampa?
Exactly the same. The bulk of the inventory is probably going to fall in the 1970 range. A ton of homes in that 1950 to 1980. And then honestly, in Ybor, you'll see a whole bunch of homes in 1912, 1915.
Oh,
The
wow.
area is very, very old and has a ton of homes with crawl spaces. So what you want to avoid is homes on a crawl space. If it doesn't have a slab foundation, honestly, just avoid it. Can you get around it? Can you figure it out? Can you have a foundation inspection? Absolutely. But those are all things that are going to tack onto the cost and your hold period. If you're a 5-year holder, maybe it's not a big deal. But if you're a 10, 15, 20, you are going to be dealing with foundation issues at least at some point, and it is not cheap. So that is one thing I would avoid with the age of the inventory. And then one other special thing that kind of gets talked about a lot in Florida is sinkholes. And so sinkholes are extremely common. They're not as bad as you see on the news, 99% of the time. But what happened back in, I would say 95 to '05, a couple people had a sinkhole that was relatively bad. The home was falling in and unsafe living conditions. And then insurance companies and engineers that were working with them came into the entire neighborhood and said, "Oh, you've got settlement cracks. This looks like a sinkhole." And so you'll see 85% of homes, maybe even higher than that, that have had a sinkhole remediation done with no significant repairs or need for that at all. And once the sinkhole home has been remediated with either a chemical grouting, a underpinning, or another, they actually insert concrete under the home. Once you do either of those three things, your risk for a sinkhole after that is slim to none, because once you solidify all the lime rock and silt that's under the home, you're done. There's nothing to worry about. Just check for warranties and make sure that engineering report gets to your insurance provider. And I believe there's still only 2 insurance providers in the state of Florida that will insure a sinkhole home. So it's going to be a little bit more expensive as well. So just keep that in mind.
Okay, good to know. And Jeff, I just want to circle back to the foundation. You said that to avoid slabs or avoid crawl spaces.
Avoid crawl spaces. I mean, you don't have to avoid them at all costs, but if the house looks a little wonky, even on the photos, just go on to the next one. I've seen 95% of every home that I've been that has a crawl space has some sort of issue. You can drop a marble in the kitchen and it ends up in the living room every time. It's just Florida. I mean, Florida with sinkholes and still homes, horrible mixture. And there's not a ton of those, but you'll see them a lot in Ybor City, a lot around some of the older areas of Tampa. But just stick to the easy stuff, slab on frame or slab on block, and you'll 99 times out of 10 you'll be good to go.
Okay, right on. And from a kind of hurricane perspective, what are your thoughts and what should people be looking out for in terms of roofs?
You want as long of a life expectancy on the roof as possible. Shingle roofs are great. Every roof made in the past, I think from 2010 or maybe even earlier, since we had that one bad hurricane that came through, all of the code is updated. The majority of the roofs have roof strapping that straps the trusses down to the block, and that helps tremendously during hurricanes. And just about every home has that. And when you get an inspection, you do your wind mitigation, and that is a very, very, very big piece of the pie to save you money on insurance, especially if you're considering hurricane coverage. So I would say maybe 1 out of every 100 to 200 clients gets hurricane protection, but it's available. And honestly, you really just want to make sure that it has up to code roofing and those standards, and you'll be just fine.
Right on. And kind of in the same vein as insurance, what are you seeing, or do you have a good kind of ballpark estimate for clients and listeners about what insurance costs are in Florida?
Absolutely. To keep it simple, like we did with the taxes, I would probably say that's very close to the 1% rule, and probably even a little bit below that. A $400,000 home, I've seen quotes anywhere from $2,800 to $3,800. So if you use the 1%, it's going to be less. But as long as you're not in a flood zone and don't have any hazard or wind additional add-ons, then that should be a perfect metric to keep track on.
Right on. Jeff, this has been super awesome, man. Any final thoughts, things, tips, tricks that folks should be aware of as they're investigating the Tampa market?
Absolutely. Don't wait. Don't sleep. If you want something, get it now. Get it while it's hot, because it's only going up. I think we've been undervalued for a very long time. I think we're at market value now, but I think honestly, the 10 to 30 year window and long range growth of Tampa, I think is going to pay massive dividends for whoever can get in there.
Right on. And I guess my last question to you, are you seeing stuff go over asking, or are you still seeing things come under list price, or how are you seeing that?
The market right now is very weird, only because I've been used to just stuff flying for 18 months now. With the rates kind of adjusting the way that they have been, everything has slowed to a tolerable level. Instead of 20 offers on a home, we'll have 3 to 5.
Okay.
So it's still chaos, but it's controlled chaos, and something we can all deal with a little bit. But yeah, if you're not offering asking, you're not getting the house. If you're not offering 10 grand, 15, 20 above the house, you're probably still not getting it if somebody else is cash. So it's extremely competitive. You have to be willing to push that cap rate on your own and be ready for the appreciation and the rent growth next year to kind of float you to where you want to be.
Okay. So good to know. Jeff, our certified agent out in Tampa. If folks have questions for you, want to get a hold of you, where is the best place for them to do that?
Absolutely. You can visit our website at any time, www.seafair-inv.com, or feel free to reach out to me directly. My cell phone and email will be left in the podcast notes, and I'll be happy to do whatever you like.
Right on. Thanks so much, Jeff. Can't wait to hear from you and chat soon.
Absolutely, buddy. Have a great day. Thank you again.
Thanks. Take care. All right, everyone. That was our episode. A big thank you to Jeff for coming on and hanging out with me. It was a lot of fun, super interesting, and clearly he is jazzed about the market. I think a lot of us should be too. As always, if you'd like the episode, I would love, love, love to hear from you all. Check out some ratings or reviews from you all, and just hear what you have to say about the show. We look forward to seeing you on the next one, and happy investing.